Greetings, everyone. I'm excited to welcome Julio Martinez, co-founder and CEO at Abacum. Julio, welcome to the show.
Thank you for having me again. I appreciate it.
Hey, great to see you again. I just saw you in New York City, I don't know, a month or so ago, so it's great to have you on the show. So let's kick this off. Tell everyone a little bit about your background.
I've been in finance most of my career. I've been for many years, I did investment banking, so guilty of that mistake, like many others around here. And I also have operational roles, particularly around FP&A and corporate finance. So I was that finance nerd, very passionate about finance topics. I had a lot of exposure to software businesses and SaaS. I was covering software, but then I had an amazing opportunity to move into technology. So I spent 4 years building fintech products and launching them to market. So at some point in time, I thought, hey, my passion is finance and I'm very mission driven about empowering finance teams. But now I know how to build products, right? So yeah, fast forward, this is what led to me founding the company.
Yeah, checking out your profile. Definitely, the investment banking, FP&A, a lot of finance background and corporate life, and now, starting some of your own companies. So that makes sense with what you're doing. So, Leah, let's talk about Abacum. What products and or services does Abacum offer?
And what we do is simple. We do business planning for CFOs and finance teams to drive performance. We are the leading financial planning and analysis FP&A platform for companies that start at Series B roughly, and then we grow from them until they can go public actually. So in our customer base, we work with companies that, are smaller and their needs are, more modest to many public companies that work with us, right? So imagine these networks or many others that are within our portfolio.
In FP&A is near and dear to my heart. I have a finance background as well and started in FP&A and then to CFO. So familiar with a lot of FP&A tools out there. So and you mentioned kind of maybe companies start at Series B size and beyond, but tell me first verticals, some FP&A solutions, our software kind of a vertical focus in a specific industry. And can you go to any industry or do you have industry targets that you're going after for prospects?
We are industry agnostic. The reason why is because the platform and particularly the computational engine is very, very flexible. So we can model any business plan. We don't have any rigidity in, we have not a templated solution for, a particular type of business. Of course, we do a lot of B2B SaaS, right? And this is how we started. But we've built a lot of nuances in that, right? So many B2B SaaS companies today, they also have payment revenue, right? Because they have embedded payments, right? So you need to have transactional revenue. So we can easily accommodate different business models, different geographies, different customer segments, different departments. So you can really blend across dimensions within our platform.
Okay. And so industry agnostic business planning software, FP&A software. But what about what I found with FP&A software? Some software targets, say, the business owner or founder and, try to make it easily kind of usable, consumable. But then you have large organizations. Hey, we need a little bit more complexity, or not maybe complexity, but sophistication for our business. So what revenue level, like where is that revenue? Is there a minimum and then you go to billions of dollars, size of companies?
Yes. So usually we don't target founders or we don't target the business owner.
Mm-hmm.
We are not that solution. We are built for business complexity and we are built to scale with the company so that they never need to leave us. So that's why, we have this extremely scalable platform, very flexible, that accommodates a lot of complexity, but at the same time, very easy to use. There is a lot of simplicity in the product. So powerful enough, simple enough. So we start with all these companies, but we target the finance thing, the VP finance, CFO, but also, of course, the FP&A team, right? The VP of FP&A, the FP&A manager, and then we grow from them. But for instance, to give you a sense, like we work with Strava, right? The fitness app. They have 160 million users. So imagine the complexity of their advanced board modeling. We work with a bridge, right? Super hot company these days in the AI field within healthcare. I've mentioned before, Dish Networks, right? 17,000 employees listed in NASDAQ. So different varieties. Yesterday we closed some companies in the Series A range that want to bet on us, right? Because hey, we see they have growth potential and they think they're gonna grow, and then they come with us because they know that with us they will not need to rip and replace in a couple of years, right? Or in 18 months. They know they can grow with us. We are simple to use, we solve their needs, and then we grow from big. They grow with us.
Yeah, and that's great to hear. So it sounds like scaling from small, a little smaller, but up to publicly listed companies, so it can handle all that complexity, which is great. And I know I've used spreadsheets for FP&A. I've used FP&A solutions. Once you use FP&A solutions, you never want to go back. You see the light, so the ROI is clear. So yeah, I appreciate that breakdown. So let's talk about fundraising, because you've raised just a bit of capital, and it sounds like 92 million to date.
We've raised over 100 million.
Oh, over 100 million. And what was that last round that you just raised then?
So we've raised our Series B 60 million. It was led by Scale Venture Partners. We are super big fans of Scale. They back HubSpot, Bill.com, Box, DocuSign, all these amazing companies. So very privileged to partner with them. Also, Cafe Innovation participated. They are behind Chime, for instance. They led Chime's just recently IPO'd Series B. And yeah, we also had the participation of all of our existing investors, including Y Combinator, for instance. So feeling very privileged, we've raised over 100 million. We have a war chest to then now continue investing in product functionality and in our expansion.
And yeah, that's a lot of cash. And so Series B of 60 million, a lot of cash available to grow and scale the business. So tell me, you're helping companies with business planning, with scaling, now scaling your company. So tell us a little bit, were there any differences between that Series A round, which I have, it was about 25 million, and now the Series B of 60 million? And were there different expectations as far as performance maturity within the company to raise the B round versus the A round?
Yes. I think what has remained constant is that Series B are usually a pretty tough round in general, right? In the market. So I'm not talking about we're very fortunate, but what has changed at least is that obviously back in the day, 2021, it was a growth at all costs scenario, right? So you had to prove a lot of ambition to grow very fast, but it was, everybody was drinking the Kool-Aid, right? On both sides of the table. Definitely the market today is way more rational. And to be honest, we like it that way. We are finance people. We are all about building strong fundamentals. So today I can share, we have more than tripled the business in terms of revenue with flat headcount. As you know, this is very difficult to do. A lot of hard work from the team. So we've all squeezed ourselves a little bit out there. But hey, tripling the size of the business for a very sizable size Series B without investing in headcount, it's very remarkable, right? It all comes down to understanding very well capital allocation, right? Understanding very well where do you need to be placing your bets and grow efficiently. So yes, in today's market, the expectation is that your efficiency and your sustainability is world-class.
And yeah, and appreciate that insight. And with a Series B, obviously product market fit is behind you. That's done. What are those conversations with the investors when you're saying, yeah, we're looking for more capital? Is it more around the market, the competitors, how big you can get versus proving out, say, product market fit or your revenue story or your traction?
Yes, I think there are a few components that, depending on the type of investor they are looking after. The first one would be go-to-market predictability. They need to understand, hey, I put in this car $1 of gas, how many miles this is going to run, right? So they want to understand very well, your go-to-market predictability and engine. And second, they want to understand your modes. And this is important, right? So product market fit is granted, but yeah, how are you different, right? And how do you differentiate from others? And that was very stellar, right? So these investors take it very seriously. They go very deep into customer reviews. They talk to dozens and dozens of our customers, but also the competitors' customers, of course, right? So they go very deep in understanding. They review every platform. They do expert calls. maybe they called you, right? Like, they were pinging everybody. And this is how you make up your own thesis, right? This is how venture capitalists build a thesis that is not only that numbers to begin. Okay, I understand the P&L, I understand the ARR bridge, I understand that predictability, talking about your acquisition channels. Okay, fine. But now from a mode perspective, so this is where we really shined, because we have a very supportive customer base. We have very, very happy customers. So that strong endorsement was what really made our Series D so successful and so fast, really, because it took us 2 weeks.
Okay, and that's great. So it's that GTM predictability, the dollars in, dollars out. I love the cost of AR metric for that. And then understanding your modes, how you different, and then they're dialing your customers, or they want to know, how they feel about your product. So yeah, appreciate that insight for that Series B raise. And then a lot of fundraising experience now. So at least with Abacum, over 100 million raised. For other founders sitting out there who may have their A, thinking about their B, any lessons learned that you'd like to pass on?
I think that there are no shortcuts.
Mhm.
In my mind, there are no shortcuts. So we were able to raise very successfully because we had very strong efficiency metrics. We were already in a position of strength from a sustainability perspective. And then we hit the market with, metrics that were very compelling. So I think that, when you are in Series A, you really need to do your homework and get it right and build a sustainable, strong business with strong foundations. And oftentimes it feels like crossing a desert because in certain product categories, like FP&A, man, you know better than I do. Like building a proper product is very difficult, right? And of course, in our sector, we've had some cases where maybe the outcomes were not very successful, so there was a little bit of noise, right, in the ecosystem. And hey, you need to explain why you're different, right? And why you didn't take any shortcuts, and you have the product depth that makes you a winner. That needs to be very, crystal clear to investors. So, hey, in my humble experience, and look, I have no idea, but in my humble experience, just, avoid any shortcuts, build the best product, get go-to-market predictability, and that's it. That's strong foundations.
So no shortcut, build that foundation. And then one last question before we move on to go to market. You mentioned metrics, which of course I love talking metrics, but what are those metrics that they want to see that should be presenting a great story for those investors?
Totally. So the classic metrics about, ARR growth year on year with a strong momentum towards the end. That's very important, very compelling. They want to say NDR, GRR. That was very critical as well in our conversations. We had very good metrics on that front, very strong retention, very good expansion. So that's very important to growth. You cannot have a leaky bucket in Series B, right? And some people got away with that in the past, but today that's not, that's why I get back to the drawing board and solve the fundamentals, right? Strong foundations means go back and then fix that issue before you dilute yourself even more, right? So GRR and DR was very important. Gross margin, as you know, in our segment, there are players that might be subsidizing ARR growth at the expense of not charging implementation fees, right? Investors are pretty smart people oftentimes, right? So obviously they might see a little bit of ARR growth, but then they will look at your gross margin and it will be 40, 50%. And then, what are you building, really? Is this a SaaS company? They subsidize no, this is a services organization. And then you're baking out so yeah, we were at about 80% gross margin, right? Because, first of all, we are very efficient, and second, we want to really charge, right? So we are not subsidizing, we are not playing games, and that shows maturity. That shows maturity to investors. Oh, wow, these guys have figured it out, right? Like they can defend that value. So I would say those are probably that payback, of course. Mm-hmm. That payback and burn multiple, right? Both, yeah. So some other efficiency in your go-to-market motion and efficiency overall in the company. So that payback and burn multiple is important as well.
Okay. Well, love to hear that. I mean, really interesting and really metrics that, kind of Series A and beyond start tracking. So yeah, I got to have those nailed down. And yeah, with the proper SaaS P&L setup, should be able to prove out those margins by revenue stream. So that's great to hear.
Yeah.
So let's talk go to market, selling into the office of the CFO, selling into that finance team. So how, like, in today's market, getting flooded with cold emails. I mean, I'm just getting constant cold emails. Tell us a little bit about how you're reaching out to CFOs and that finance team.
We are not PLG, right? So for clarity,
Hmm.
we sell to the size of companies that we sell to like that. That's not the case. So we are sales led, right?
Hmm.
I think we benefit from very strong inbound.
Hmm.
So over time, we put our brand out there and that's unstoppable. So we are benefiting from that. You are right that the classic cold outreach is difficult these days, right? It demands perfection. It's so difficult to cut through that noise. So I think it requires like a very talented team, but also a lot of technology, like reading hidden signals, like enriching your data, of course, multi-touch, multi-channel, a lot of persistency to make it work. So our team, hey, very successful, 1,000 people, like I'm a big fan, but they have obviously a very hard job these days. Right. So, but hey, with the power of technology, it's also very, very scalable. And that's what we're working.
Yeah, yeah. So the sales led inbound plus cold emails, and it's interesting. Like, yeah, so many cold emails are off target. Like, not even like, emails like, "Hey, do you need a new roof for your business?" It's like, come on, But as a CFO, I will still open up emails. Like, if there is something catchy that's finance related, accounting related, metrics related. Yeah, most likely I'm opening that up. So not that it doesn't work, but just, yeah, like you said, there's a lot of noise and you just have to do your research a little bit more now. And so once you land the CFO, they're signing, or maybe you're working to sign that CFO. Tell us a little bit about the pricing model because we know so many different ways to cut it now with subscriptions, with usage, with outcome based, all these different things. Tell us a little bit how you price the product.
Yeah, with a platform fee, typically starting at 30K. And then we have add-ons, right? Those add-ons are going to be extra integrations, data integrations, different types of seats. So we have admins, we have members, we have viewers, right? So we keep it relatively simple. And then we also have add-ons, right?
Mhm.
Add-ons are going to be, SSO or, other premium features.
Okay. Okay. So it sounds pretty straightforward. So the CFO should understand that, which is always good, right? Understandable pricing. Let's not confuse the prospect. So appreciate that. So Julio, at this stage of your business, Series B, scaling, growing fast, and we talked about some metrics earlier, but internally, when you're sitting down with your ELT, are there any favorite numbers or metrics that you and your team focus on to guide the business?
I was saying our North Star metric is net new ARR. So net new is where we focus more. Then I typically alter to the being the formula, right? So, and then allocate some of the numbers per team, right? But net new usually incorporates probably most of what you already, like keep it simple, right? Net new already is, 4 metrics, right? So by that, you can allocate to different teams, different metrics. Of course, then we have a company dashboard. We also keep it simple. It's going to be 10 metrics. And then that is updated every week. And then we have it, as you would expect, given our background, very metric even, right? And then, of course, then you have all this, like we use our own product extensively. And then, so we have, obviously all the financials, the rest of the metrics. We'll have all the metrics that matter in one place. Salesforce data, HubSpot data, HIRS data, usually NetSuite data, everything combined in one place.
Well,
So
that I wouldn't expect any less that you guys have those data sources mastered, pulling in bookings data and headcount data and financial data, and then creating those dashboards. So not surprised, especially I would say right at a Series B, I guess that maturity, that financial maturity would be expected there at a Series B then.
yes, yeah. It's definitely expected. Or hey, maybe it was expected from us, right? So given our background, but definitely, I think also particularly scale is a very metric-driven fan. They really need to. They have a very good, I would say, reputation on benchmarking data. They see a lot of B2B SaaS. They are specialized in B2B SaaS, so they know very well where you need to be as a business, right? And then they show you the metrics. Hey, this is how you compare with all the performance. Wow, okay. It's like you get yourself naked in the mirror, right? It's very, it was very interesting.
Yeah. And before we talk a few stats and figures and then wrap up, tell us Series B due diligence. And I know timelines are always a little bit different, but how long did that take?
It took us 3 weeks.
3 weeks.
So, and then it was classic financial, legal, and commercial. And what you would expect, right? So you just spend some time setting up the data room, all your legal documents. Hopefully you have that a little bit tidy. It should be straightforward. But yeah, and then financially, yeah. So they do some sampling, right? So it's not a fully fledged audit, but hey, it's thorough, right? Like they want to understand, around P&L to cash,
Yeah.
everything is signed correctly, right? That there is nothing weird, and apparently, So, and then the commercial due diligence also, that's also not commercial, but taking a look at the pipeline, taking a look at deals.
Yeah. 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 So usual due diligence, but 3 weeks of pain and then done. So that's great. And then a few stats and figures here. Julio, when did you found Abacum?
So we founded the company in 2019.
Okay, 2019. So about 6 years in or so, over 100 million raised, and things seem to be going well. And then, do you have a headquarters location?
Yeah, we are headquartered in New York, where I have a live with my patient wife and 3 children. So we are here in New York, and we are hiring a lot, right? So we are hiring intensely in New York and in some other places across the country.
Okay, perfect. So headquarters New York, and then also right a lot of staff then in Spain as well. So kind of are those the two main kind of hubs?
Yes, exactly. So we have offices, head office New York, London, and Barcelona.
Okay.
And then we have different teams in different locations.
Yeah. Oh, that's great. Yeah. And then what's the current team size?
We're 110 people, 15 people now. And growing.
Okay. Around 110 and growing. And then Julio, appreciate your time and sharing your journey so far. So what's coming up next for Abacum? I mean, a lot of capital raise. That's a lot of cash, 60 million bucks. So what's next for Abacum?
It's of course a very exciting time to deploy a lot of money in very efficiently. A lot of sustainability, right? So this is the time to be disciplined. This is the time to be disciplined and to stay true to our values. But this is not all about, continue growing fast in the US, which is of course our biggest market by far, or other geographies, or like that gets us very excited. But in truth, what gets me out of that is to build this freaking amazing product that is unbeatable for our customer base, right? Like we are going to be building so much competitiveness into the product for companies in all the stages that, of course, and maybe this is a question you have in mind is, hey, what are you guys building in AI? Yeah, of course, we're going to be building millions in AI functionality and more functionality besides AI. So we are very excited about like the product invest. We already are leaders, right, in the mid-market category as the Series B evidences. But now it's going to be, we're going to be investing in increasing the stones.
Yeah. And then one last question before we wrap, because you mentioned deploying money efficiently. And of course, the debate, growth at all cost or that balance rule of 40, growth versus profitability. So is there guidance from the board and or the investors on like a range of what's acceptable as far as maybe burn and where they want you to operate? Because I assume it's still right, very ARR focused and growing ARR, but is there like a range where it's like, hey, Julio, please don't run negative 20% EBITDA margins?
I'm sure there will be.
It's coming, that next board meeting.
So I think that will be in the next board meeting. So I can share in a later conversation about guardrails. And definitely conversation is on ARR, not they trust us as it's okay to sacrifice a couple of points on ARR. We are here for the long term.
Yeah.
We are here for the long term to build an iconic business, right? The best FP&A platform ever. And look, if it took you, instead of 60 years, 17 years, what's the difference? But if you reduce the operational risk, build the business with consistency, with intentionality, with discipline, and you were more predictable rather than rushing over higher, let's build the right way.
Yeah. Yeah, makes sense. Well, Julio, really appreciate your time today, sharing your journey so far, and look to, excited to follow Abacum's journey as you continue to scale. If listeners would like to learn more about Abacum, where should we send them online?
Where Abacum.ai. This is where you will find us. And also I post frequently in LinkedIn. So sharing finance insights and other topics. So find me there as well.
Well, perfect. So check out abacum.ai. And Julio, I follow you on LinkedIn, so I see your posts, which are great. So yeah, check out abacum.ai to learn more about what they're doing. And Julio, appreciate your time today and sharing your journey.
Ben, thank you for having me. It was a blast.